Time now for the markets with Leighton. And Leighton, the BSE case, obviously a big shock to the beef sector.
Definitely, and we'll be discussing the longer term implications of that with our Extension Ag economist here in a moment. Also ahead this week, U.S. catfish processing remains down. Soybean futures hit a 3.5-year high on Tuesday, while a sell-off that same day turns the corn market flat. A sharp price drop in cattle futures was the initial reaction early in the week to that new case of mad cow disease in California. Extension Ag economist Dr. John Michael Riley joined me in studio Wednesday afternoon to discuss that development as well as the April 20th cattle on feed numbers. John Michael, we're recording this early Wednesday afternoon. Where are the markets right now post this initial BSE news?
Well, they have rebounded a bit today compared to closing. All 2012 contracts closed limit down yesterday. 2013 contracts were closed a little worse than $2 a hundredweight, which limits $3 a hundredweight. They've rebounded a bit today. I think I wouldn't call it an overreaction yesterday. Anytime you see a headline like a BSE, that does create some concern, especially where our markets are at today. But they have come up. It appears that the trade implications might not be as disastrous as previous BSE cases. The thing to keep in mind is that we are very reliant on our exports in today's cattle industry versus when the most recent case in 2006 for U.S. cattle. At that point in time, our exports were roughly 60%, or they were 60% less than what they are today. In fact, 2011 exports were better than the pre-2003 when the first case came up in the U.S. So these export markets are important. I think the market reacted that way because of the potential implications. It appears that those implications might not be as dramatic as maybe expected yesterday.
So basically we are just going to have to sit and monitor this and see how it unfolds in the weeks and days ahead.
This story isn't over yet, so more could continue to progress as we move forward.
All right, let's back up to April 20th, the most recent cattle on feed report, which basically showed more cattle in the feedlots around the country, right?
More cattle, 2% above where we were at a year ago, a little less than 11.5 million head of cattle in feedlots. That was mostly expected. In fact, it was the average of the expectations was exactly 2% as well. Placements were lower, which is no surprise. Just given the big push of cattle going into feedlots the past couple of months, they were down a little more than 6%, but the market expected it to be around a little more than 7%. So that might have been bearish, but we had more marketings. It all evened out, and that's why we got the on-target cattle on feed number.
We shift from cattle to the pond bank, where U.S. catfish prices were down a little from February to March, but still above year-ago levels. These numbers from the USDA were released April 20th and are for the month of March. The average pond bank price paid to U.S. producers was $1.20 per pound. That is down 2 cents per pound from February, but still 12 cents above 1 year ago. Farm sales, meanwhile, totaled over 27 million pounds round weight, a decrease of 9% from March of 11. Processor sales were nearing 15 million pounds, down 18% from March 1 year ago. Our trivia quiz will transition us into the row crop side of the markets, and here is this week's question. Where does Mississippi rank nationally in soybean meal consumption? Keep in mind the amount of poultry and livestock being fed in the state as you consider your answer. Is it number 8, number 12, number 25, or number 39? I'll tell you here in less than 5 minutes. A declining South American crop and growing Chinese demand prompted price gains for soybeans this week. In fact, a 3.5-year high in bean futures was recorded Tuesday, according to Dow Jones Newswires. Analyst Darren Newsom says that he's not surprised and even expects the trend to continue.
It does seem to indicate there's a lot of money moving over into soybeans right now. Should probably keep pushing it higher again. Its seasonal rally usually goes up into early July. So we've still got some time, and we've still got a lot of fuel to burn up in the soybean market.
As for the outlook for corn, buying in this sector of the markets has been less enthusiastic as we record Wednesday afternoon. Analyst Tom Fitzenmeyer says there's probably enough supply to get us by until harvest, but there are some situations he does expect to see this summer.
We certainly could see some extra downtime on ethanol producers this summer. You can see some substitution of wheat for corn this summer. You're going to see the fact that the new crop's getting planted so quickly, so far advanced, that corn's going to be available sooner. So adjustments are going to be made here, and I know everybody thinks we have to go higher because it's hard to buy corn, and that's certainly true. It's not necessarily because we don't have the corn. It's also partially because farmers are flush with cash and don't have a lot of reason to sell corn. So I think you get cash corn up in that 650 area, 655, 660, somewhere up in that range.
Tom Fitzenmeyer says the upside in corn past that point will be limited. Well, we wrap it up now in cotton. There's news out of China that country is reducing its import tax. That, of course, would be very favorable for U.S. cotton exports, and it should help limit the downside price moves. Also favorable for the cotton market itself is the new planting forecast out of China this week. Dones reports that China's cotton plantings will be down over 9%. Now, that's not down as much as previous forecasts had called for, but still positive for the cotton market. Just before our feature story, here's the answer to that trivia quiz. Mississippi ranks 8th in the nation in soybean meal consumption. So A is the correct choice.